Luxury watchmaker which had a tempered listing yesterday, Ethos. We have the management joining in right now. Yashovardhan Saboo is the managing director of the company. Thank you so much for taking time out. Let's start off by talking about your long-term financials, because over FY17 to FY22, your revenues grew at a CAGR of 11%. What is the growth target that's been set by the company in terms of the outlook for the next 3 years?
I just want to preface this by saying that during these past 4 or 5 years, of course, the last 2 years, we saw COVID impact. And before that, we had regulatory changes which slowed down some things, including the requirement of PAN card demonetization and so on, which had an impact, especially on the luxury watch business. Those very changes are now helping us very much, because a structured and a professionally managed, transparent player like us is benefiting from things like everybody having to give PAN cards and so on. So we are seeing now the tailwinds behind us. On the other hand, we see that the market itself, the growth in the market itself has accelerated. The market, which used to grow at 8 to 9%, is now forecast to grow at about 12 to 13% per year. And therefore, we certainly believe there's going to be an acceleration in our growth. Yesterday, we already spoke about growth in this year being in the region of 30 to 35%. We already see that in the first 2 months of this year. And we believe that going forward for the next couple of years, we should be maintaining a growth rate of somewhere in the region of 25% CAGR.
Okay, now in the 9 months FY22, the company achieved a profit margin of 4%. That's higher compared to what you've seen over the last few years. But the question is, Mr. Saboo, is this rate sustainable going forward?
Well, actually, now the numbers for the full year are out, and the results of the fourth quarter were very strong. So the results for the full year are even better. For example, the PBT for the full year was 35 crores, and which was 191% growth over the previous year. So not only are the margins sustainable from the 9 months, they're actually increased for the 12-month period. And we believe margins profitability is going to increase in years ahead for 2 or 3 main reasons. First, of course, is the fact that as the top line increases, there's going to be operating leverage kicking in pretty sharply. That is one reason. Second, there is a margin improvement, which itself is caused by better margins on our brands, and also better marketing, which allows us to sell products better. And for all these reasons, we actually believe profitability is going to increase pretty steadily over the next couple of years.
Sure. Mr. Saboo, now that the fundraise is done, if you could take us through how many stores will you actually be opening using this money that you've raised? And also, how many stores do you plan to open for the full fiscal?
As per the documents, we are going to use the funds to open 13 new stores and completely renovate 6 stores. We do have plans to open a few more stores, but as these were not specifically known, we could not list them in the RHP. We are looking at a couple of new cities. Indore is already included in our plans. Kochi is in our plans. So a couple of new cities are very, very much in our plans to open new stores.
Right. So in general, how many stores you think you can plan to open every financial year? And will it be pan-India focused, or is it going to be more region specific?
Our focus is really pan-India. And as I mentioned, there are 13 stores already planned. We believe over the next 3 years, there may be about a total of about 20 stores that are planned. This includes stores for our business of pre-owned watches. As of now, we have only 1 lounge in Delhi. Another one is planned in Mumbai at the end of this fiscal year, but we plan another 2 or 3 in other cities over the next 2 or 3 years.
So online sales, if I see the metrics that has been provided, it's currently at 33%. Where do you see this online offline mix going forward? I understand very luxury items are of course where a consumer can be to buy online, and how does that do what does that do for margins then?
We don't really distinguish very much between online and offline. We call our platform the omni-channel platform. Phygital is another word which is used because today customers for luxury products, like for many other products, uh, actually move seamlessly between offline and online. Especially in luxury products, people like to discover products with the convenience of online. But before they actually buy a product, they do want to look at it physically, see how it fits on the wrist or how it looks, perhaps consult other members in the family. So there is really a seamless movement between the online and offline platforms. Currently, as you mentioned, the online platform, what we call internet aided sales, is about 33%. We believe this is going to stay in this region, perhaps move up to about 35, 36%, but not much more, because the physical interaction is extremely important to be able to see, touch, and feel the product, feel the luxury, know about its features and why these watches are so coveted. I believe this will remain the same. As far as the profitability is concerned, we have exactly the same price structure, whether it's offline and online. And because we work seamlessly between the two platforms, we believe the profitability is the same.
Now, the pre-owned market is, obviously fragmented. It is unorganized. What does it contribute for your sales? And, what would be the cascading impact for growth in this segment?
That's very interesting, this market of pre-owned watches. I'll just mention it that globally, this business has grown very rapidly in the organized space over the last several years. And today it is estimated to be almost 25% of the market for new watches in the luxury space. And it is growing. So by 25, 26, it's estimated to be about 50% of the market for new watches. In India too, this market has been growing. Technopack has estimated that it will grow from around 50 crores in FY20 to almost 700 to 900 crores in FY25. And that's a very rapid growth. We are experiencing this as well. We just started 2 years ago. The first year we clocked about 11 crores. Second year we clocked about 32 crores. This year we are planning to clock above 75 crores. So that's like a 2.5 times growth. We are seeing this growth happen in the pre-owned segment. And this is an extremely exciting segment and a very efficient and profitable segment for us.
Thanks, Mr. Saboo, for joining in.